So let's proceed to part 2, short problems. So number 1, in Papa Sabaco Incorporated, um, it received interest payment amounting to 63,200 and paid interest expense amounting to 299.10 pesos. So its interest receivable, the beginning of the year, was 2,515, and at the end of the year, it had a balance of 9,210. So the question here is, how much interest revenue was reported in the company's statement of financial performance for the year ended December 31, 2020? So this is assuming that interest income is always accrued and paid only a year after. So let's visualize this. Let's write down first the given, the beginning, and ending interest receivable. So that's 2,515, and then ending is 9,210. So the company received 63,200 interest payment. So for this interest receivable, this decreases interest receivable. Interest revenue, the other hand, increases interest receivable. So to get the interest revenue, you have to squeeze it. By squeezing, you add interest receivable with the interest payment. So the opposite, since this is a decrease, you add it. And then you subtract interest receivable beginning balance. Then you get the interest revenue for the year of 69,890. Number 2, in number 2, we're given a table for DBH company and PCY company. So we're given the balance sheet, beginning and ending assets and liabilities. So the owner's equity investments by the owner, and then the withdrawals, and then the income statement, revenues and expenses. So we have 2 requirements here. So let's go first to letter A. What are the investments by the owner of DBH company rather? So since we're looking at the owner's equity, let's get the beginning, the increases of owner's equity, which is the investment. You decrease it by the withdrawals and then the ending. So here in number 2, already plotted the given. So where do we get the owner's equity beginning? We get it by subtracting liabilities from the assets beginning. So assets plus liability. So that's assets plus liabilities here. So that's 51,000. We get the ending by doing the same. So let's put it here. So then we get the net income. So the net income, you can get it by subtracting the expenses from the revenues. So we have 125,000 net income. So to get the investment of the owner, we squeeze it again. So to get the amount, we add the owner's equity and then less it with the net income. So since again this increases the equity, so when we compute it, we subtract it. And withdrawals, it decreases, so we add. And then again we subtract the beginning. So the final answer is 58,000 investments by the owner. So on the other hand, letter B, what we're looking for is the ending assets. So to get that, we need to do the reverse. So we'll get the owner's equity ending. To get the ending, we compute for the beginning and the net income to get the ending. And when we get the ending, then we compute for the assets ending this time. So first, again, to get the owner's equity, subtract liabilities from the assets. So we get 50,500 for the PCY company, and then the net income, revenue less expense, it's a profit, it's a income of 146,000. So to get the equity, the beginning balance increased by the investment of the owner, decreased by the withdrawal, and then increased again by the net income. So we have here 63,000 owner's equity ending. So from what we know, assets less liabilities is owner's equity. So this time, owner's asset ending is owner's equity plus liability. So we now have 143,000 for the asset ending. Okay. Number 3. Now, huwag kalimutan ang ninakaw na PhilHealth funds Jewelry's financial year ended November 30, 2020. So, as of the end of the fiscal year, we have a balanced prepaid insurance account of 2 insurance policies of 15,400 for the first one, and the second one is 9,500. So the question here is, what amount of prepaid insurance should be included in the balance sheet? Okay, so to get this, at the beginning of the year, we have this balance. So at the end of the year, at the end of the fiscal year, we already consumed those prepaid insurance. So from prepaid insurance, we record insurance expense. So first we compute August 1 to August 1 to July 31 the next year. We computed it's 12 months. Also the same with the second insurance policy, December 1 to November 30, the next year is 12 months. So we prorate it. Number 3, we prorate it. So the term here is 12 months, and then 12 months. So the first one, from August to November, August for the month of the August, September, October, November. So that's 4 months. 4 months, you consume 4 months of remaining 8 months. And then for second one, December, date of expiration. However, we only count for the this year, November 30. You don't include December, so that's consume everything. Right? Zero. So then we multiply balance by time remaining divided by the total. The same here. So we get 10,267. So for number 4, on September 1, the accountant of BBU Fisheries mistakenly debited interest expense in recording the advanced rental payment for the next 12 months. So the rest of the entry was correct. So credit to cash. How much is the difference between the assets reported in the balance sheet and its corresponding correct balance? So we have to indicate whether it's overstated or understated. So this number 4. So what the accountant did is that debited interest expense for 8 and cash for 8. So we have two alternative treatments for the correcting and adjusting entry. So first, we offset, so we do recognize interest expense by crediting it for 8. So this gets cancelled out. We have a prepaid expense of 4,800. So on September, October, November, December, so after 4 months, the payment is actualized. So it becomes rent expense. So that's 4,800 times 4 months out of 12. Yeah, so 1,600. On the other hand, so after doing the wrong entry, you can debit, instead of prepaid rent, you debit rent expense. So that's also 4,800. So at the end of the year, you need to recognize prepaid rent, since there is a portion of that 4,800 in which you haven't used yet. So that's 4,800 times for the 8 months, remaining 8 months. So 8 divided by 12. So if you check that, 4, 8 minus 3, 2, that's 1,600 rent expense, same as here. So should be rent expense is 3,200. A prepaid rent rather. Also here should be prepaid rent is 3,200. Reported is none. So the correct answer is it's 3,200 understated. Next, number 5. So in December 31, 2020, unadjusted trial balance of IS Kapabab Industries. We have cash, accounts receivable, equipment, and the others. So what we're looking for here is how much is IS Kapabab's total asset. So total asset. So first, we input the unadjusted assets. That's 56,000. And then let's read more about the added information. So first bullet, all rental payment for 12 months was recorded under rent expense. At the end of the year, 9 months worth of prepaid rent was used up. So with those rental payment of 12 months was all recorded under rent expense, which should not be, since there is 12 minus 9, so 3 months prepaid rent. We need to record that as assets. So rent expense is 12,000. 12,000 times, we need to recognize the 3 months worth. So we get 3,000 additional asset. So it is increased. Next, bullet 2. An entry made to record a purchase of equipment had a debit to equipment for 2,000. However, the actual cost should be 6,000. So this time, we need to increase our equipment for 4,000. So debit equipment, credit payable for 4,000. This also increases our asset. And lastly, an entry of a collection of 3,500 worth of receivables was submitted. So should record the cash received and then they recognize the accounts receivable as collected. So that's 3,500 debit to cash, 3,500 credit to accounts receivable. So looking at the entry, accounts receivable decreased, right? So that's an asset decrease. However, when you decrease the accounts receivable, you also received cash, which is also an asset. So there is no net, so no effect in the adjustment of the asset. So the total asset adjusted is the unadjusted plus the increase 3,000 and another increase of 4,000. So that's 63,000. So let's go to number 6. So for number 6, Isamud proprietorship forgot to do the adjusting entries. So relevant accounts are as follows. We have here equipment, supply, sales revenue, advertising expense, rent expense, salaries, and additional information here. So the question is how much is Isamud's proprietorship's net income or loss for the period? So what we have here is that we plotted already to get the net income, which is before adjustment. So to get the net income, subtract the sales revenue, and subtract the expenses from the sales revenue. So sales revenue minus the advertising, the salaries. So these are all given. And then we have additional information. So depreciation of the equipment, 3,000. So we record depreciation by debiting depreciation expense and crediting accumulated depreciation for 3,000. Another 3,000 here. The next, as of the end of the period, 1,500 worth of supplies remain. So from what we know, the total supplies is 3,000. At the end, it's only now 1,500. So we record the 1,500 assets. So we do recognize the supplies, we credit 1,500, then we debit the supplies expense. Here depreciation expense of 3,000, supplies expense of 1,500. Last, Isa pays her secretary every Friday to week. Her secretary earns 1,500 per week. Each week consists of 5 working days. The period ended on a Wednesday. So of that 1,500 divided by 5, Isa earns 300 per day. With 300 per day, with the week ended on Wednesday, but Isa is paid Friday, so Isa was able to work. The secretary of Isa was able to work from Monday, Tuesday until Wednesday, so that's 3 times 300. So that's 1,500 divided by 5 days times 3 because Secretary was able to work for 3 days, so that's 900. So that's additional 900. So net income, that from the adjustment, unadjusted, subtract the depreciation expense, supplies expense, and salaries as adjustment. So the total net income after adjustment is now 2,600. And lastly, an entry of a collection of 3,500 worth of receivables was submitted. So should record the cash received, and then they recognize the accounts receivable as collected. So that's 3,500 debit to cash, 3,500 credit to accounts receivable. So looking at the entry, accounts receivable decreased, right? So that's an asset decrease. However, when you decrease the accounts receivable, you also received cash, which is also an asset. So that there's no net, so no effect in the adjustment of the asset. So the total asset adjusted is the unadjusted plus the increase 3,000 and another increase of 4,000. So that's 63,000. So let's go to number 6. So for number 6, Isamud proprietorship forgot to do the adjusting entries. So relevant accounts are as follows. We have here equipment, supplies, sales revenue, advertising expense, rent expense, salaries, and additional information here. So the question is, how much is Isamud's proprietorship's net income or loss for the period? So what we have here is that we plotted already to get the net income, which is before adjustment. So to get the net income, subtract the sales revenue, and subtract the expenses from the sales revenue. So sales revenue minus the advertising, the salaries. So these are all given now. And then we have additional information. So depreciation of the equipment, 3,000. So we record depreciation by debiting depreciation expense and crediting accumulated depreciation for 3,000. Another 3,000 here. The next, as of the end of the period, 1,500 worth of supplies remain. So from what we know, the total supplies is 3,000, and at the end, it's only now 1,500. So we record the 1,500 as expense. So we do recognize the supplies, we credit 1,500, then we debit the supplies expense. Here, depreciation expense of 3,000, supplies expense of 1,500. Last, Isa pays her secretary every Friday of the week. Her secretary earns 1,500 per week. Each week consists of 5 working days. The period ended on a Wednesday, so of that 1,500 divided by 5, Isa earns 300 per day. With 300 per day, with the week ended on Wednesday, but Isa is paid Friday, so Isa was able to work. The secretary of Isa was able to work from Monday, Tuesday until Wednesday, so that's 3 times 300. So that's 1,500 divided by 5 days times 3, because secretary was able to work for 3 days, so that's 900. So that's additional 900. So net income, that from the adjustment, unadjusted, subtract the depreciation expense, supplies expense, and salaries as adjustment. So the total net income after adjustment is now 2,600. That's 2,600 net income. Don't forget net income. So let's go to number 7. So master cleaners received 30,000 advance payment for from its customer. At year end, 65% was completed. So in addition to that, another 90,000 was recognized for the complete cleaning service. At the end of the year, electricity amounted to 15,000, which is debited to utilities expense. So the only source of revenue is the cleaning service. The net income is 45,500. So the question here is, how much is the total expense incurred by master cleaners? So number 7. So first, we plot what's given. So what we have here is the revenue, the net um, income. So the net income is 45,500. So to get the income, again, subtract the expenses from the revenue. So we're looking for the expenses, but we can compute for the revenue. So the revenue is 65% of the advance payment, 30,000. 30,000 times 65%. And another 90,000. So in computing the total expense, we don't consider the 15,000, since this is what we're computing here is the total expense. So within the expense that we'll be computing, the 15,000 is already included in there. So to get the expense, net income less the two revenues. So the correct answer is the expense is 64,000. So let's make it positive. So the expense is 64,000. Number 8. So Kang Geo Consulting had utilities payable of 56,000 at the start of the year. So it paid 87,600 for the year for its utilities. So you also have an additional information that the expense amounted to 65,000. So how much utilities payable was accrued? So to complete for number 8, let's plot first the given. So at the start of the year, the utilities payable is 56,000. The utilities expense for the year, 65,000. So to get total accrued, we know that at the beginning it's 56,000. The expense the current year. So we have a total of 121,000. With that 121,000, how much did we pay? We're able to pay 87,600. So how much should we accrue? So we add the beginning. This is the total utilities less 43. So the correct answer is 33,400 utilities payable accrued. So among the 121,000, you already paid 87,600 and you accrued 33,400. So number 9, JYP Entertainment decided to give GOT7 a high quality comeback. So the management borrowed from BH Entertainment. So it is a note payable on January 31, 2021. So it was issued on September 30, 2020 with a face value of 150,000, 50 million Korean won with 500% annual interest. So what we're asked here is the interest expense related to the note for the income statement of the year ended December 31, 2020. So we have to compute for this interest expense. We get the face value of 150 million Korean won times the 5% annual interest times the period covered for the interest expense. So it was issued on September 30, and then we'll be computing until December 31, 2020. So October, November, December, that's for 3 months. So 150 million won times 5% times 3 months. 3 out of 12. So the correct answer is 1,875,000 Korean won. It's interest expense. Next, let's proceed to number 10. So team academic freeze had the following items in the journal entries for the period ended December 31, 2020. So 15,000 worth of supplies charged under miscellaneous expense. Bullet 2, entry for a withdrawal was the debit owner's capital for 8,900 and credit to cash. Next, 1 year advance payment for insurance was made on June 30. So as of December 31, the balance of insurance expense still contained the full 65,000 worth of pay. So if these items persisted before closing the books, how much would Team Academic Freeze net income be overstated or understated? So first, let's go through the different bullet points. So first, 15,000 worth of supplies was charged under miscellaneous expense. So since this is supplies, it should be capitalized. So by charging it under miscellaneous expense, our net income, our expense would be overstated. So if the expense is overstated, then our net income is understated. So understated by 15,000. Next, bullet point 2. The entry for a withdrawal by the owner was debit to owner's capital, 8,000 and credit to cash, which is true. So no effect. And then bullet point 3, 1 year advance payment. So what happened here is that the insurance expense was overstated since the 1 year advance payment was all debited insurance expense, which should not be, since we have to recognize the prepaid insurance not consumed yet for that year. So that's 65,000. That's on June, so that's half a year. So half of 65,000 overstated expense. So if it's overstated expense, you understate the net income. So 65,000 divided by 2. understated. So again, the total impact on the net income is 47,500 understated net income. Let's go to number 11. So CBXSD is a music studio company owned by Sule Kai-su. So the company has a salary expense of 65,000 on its income statement. So cash payments amounted to 57,500 during the period. So at the end of the year, the salaries payable showed a balance of 12,000. So what we're looking for here is the beginning balance of the salaries payable account. So let's plot the given. Number 11. So to get the salaries payable beginning, we plot here all the items that would affect the salaries payable. So salaries expense would increase salaries payable. Salaries payment would decrease salaries payable. So ending is 12,000. The end of the year it's 12,000. Salaries expense 65,000 and payment 7,500. So to get the salaries beginning, we just squeeze it. Get it? We reverse salaries payable. Since this salaries payment is a decrease, you add it. Then you subtract salaries expense. You get the salaries payable beginning balance of 4,500. Next, let's go to number 12. So Zhonghan Angels Burger has the following accounts and balance. So we have your prepaid rent, December 31, 2019 and 2020. Same with rent payable, 2019, 2020. So rent is typically paid once every 2 months. So that's every 2 months, 6 times a year. So assuming that no other transactions pertaining to rent happen in 2020, what is the rent expense in the 2020 income statement? So by looking at the problem, you know that within December 31, 2019 to December 31, 2020, you consumed the 17,000 all. So this prepaid rent becomes rent expense of 17,000. So to recognize the rent expense, debit rent expense, and then you recognize the prepaid rent by crediting it 17,000. And then looking at the rent payable from 0 to 2,600, you were able to accrue a rent payable. So that's additional rent expense of 2,600. So what can we observe here? An increase total rent expense is 17,000 plus 2,600. So that's 19,600. Next, number 13. Ayoko na sa online classes pays its employees every Friday. So the calendar 2020 ends on a Tuesday. So we have 3 different types of employees. So for the first bullet point, 3 employees received a salary of 2,700 per week per employee. What we're looking for here in number 13 is how much is the salaries payable, how much is the salaries worth, we weren't able to pay the employer since we pay it every Friday. So we have to accrue it and pay it on the first Friday of the next calendar year. So the first one, 2,700 per week per employee. So we divide it into 5 since we have 5 working days. And we multiply it by the number of days they were able to work but was not paid. So that's 2 days for the Monday and the Tuesday. So 2,700. So that's 2,700 times, so they divide it into 5 times 2 days times 3 people, 3 employees. The next, 2 employees, 6,000 per week per employee. So again, 6,000 per week, so divided by 5 times 2 days times 2 employees. And then lastly, employee X receives a salary of 17,500 once every 2 weeks. So the 17,500 consists of 10 working days. So the employee hasn't received any payment in the week preceding the end of the calendar year. So that's surely 5 days we weren't able to pay employee X. And then for the last week for the calendar year, another 2 days for the Monday and Tuesday. So that's 7 days in total. So 17,500 times 7 days divided by 10. So that's 10 days, so 2 weeks. The correct answer is 20,290 salaries payable. Okay, we're down to our last two short problems. So let's proceed. Number 14. So Lee Suman is a fan of dressing up during Halloween. In 2019, he opened a costume shop. And in 2020, the shop had a supplies expense for the year amounting to 12,000. So supplies at the end balance is 2,000. 2,000 the beginning of the current year. So that's beginning of year 2020 because that's the end of last year, which is 2019. A physical count, 15,000 at the end of the current year, which is 2020. So beginning supplies 2,000, end of year supplies 15,000. So we're looking for the supplies purchased during the year. So let's plot this. So again, we're computing within the supplies account. So we plot down everything that's related to the supply. So beginning is 2,000. Ending is 15,000. And so we need the beginning, the increase in supply, which is what we're looking for, the purchases, the decrease in supplies, which are the expense or expense, 12,000. Again, to compute supplies purchase, we squeeze it. So to get the value, we reverse. So supplies ending, the decrease supplies expense, we add it back, and then we subtract the beginning. So the correct answer is 25,000 of supplies were purchased during the year. Next, we'll go to number 16, so Neo Culture Technology Corp was able to collect 68,000 from its customers in the last quarter of 2018. So given below additional information, so at quarter 3, quarter 4, for the cash and sales revenue. So all sales were originally made on account. For the quarter that ended on December 31, what was the net increase or decrease in accounts receivable? So we need to indicate if it's an increase or decrease. So let's plot this. So number 15. So we were asked for the net increase or decrease. So looking at sales revenue, looking at the accounts receivable, we look into what increases accounts receivable, that's sales revenue, and what decreases accounts receivable is the collection. So sales revenue for fourth quarter is 46,500. The cash collection is 68,000. So the net of these sales revenue less. So it's a decrease, net decrease. So it's net decrease of 21,500.